Hey traders, this is Ron Haight. Happy Hump Day. Hope you guys are having a fantastic day. As always, everything in this presentation is for educational purposes only. We'll kick off here using Thinkorswim. This is the S&P 500 ETF of spiders. We pushed higher today by another 0.5+%. The target remains the all-time highs. So 339, we're at 326. That's still $13 on the SPY or 130 S&P points. So at this rate, we'll be there by Friday. just kidding, but bulls have the edge. Just like the weekend video, keep an eye on that red line, the 20-day EMA. We get below there, that's the first sign there might be some trouble brewing. The big one, though, we want to watch, the 50-day. We break that one, that's the institutional moving average in orange. That's when there's problems in paradise. The Dow up 0.6% today, 0.61. It hasn't eclipsed the previous high, so it is lagging. Once we take out that high, it seems inevitable at this point on June 8th. Then we go back to the all-time highs and the Qs. I did have a question. We had this bearish engulfing, we come back up, and then we close lower again. Is this the sign of a potential double top? I mean, it could be. If we ended up crashing from here, it would seem that, that would be a double top, right? But we're not going to know till after the fact. What can we do as traders to try to get a feel for how the trend is going? I would point you right to that red line. Until we get below it, there's just no problems. Every time it's dipped, it was a buy point. So all the dip buyers are being rewarded. Once we break it, on a closing basis, they will not be rewarded. Then we go instantly to the orange line. We're not going to need much more of a higher close before we take out the high from the intraday high from July 13th, which is that bearish engulfing pattern. We take that out, there's nothing standing in its way anymore. Now, there were companies out with earnings tonight. Let's start with those. I got a couple different stocks to look at here. Here's Chipotle. They closed at $11.85, and they are crashing after hours by the tune of $9 whole. So a stock that went from 400 during the sell-off, it's now at 1100, is down a whopping, what is that, $11 whole on the bid right now, $9, $10. So Chipotle's not moving that much. If that's all it's going to pull back, this is still very, very bullish for the stock. Because if I zoom in here on Chipotle, it's below the 20-day, back on June 12th? That's actually the only day. Take a look at that. It's the only day since we got above it, back on 4/6. So the first sign of trouble, we get below the red, or I think the big sign of trouble, you guessed it, it's going to be the orange. We get below there, and they're not that far apart. This is an $1,100 stock, so that's only $50 between here and here. So we close below both. Bears would then get the edge. How about Las Vegas Sands, casino stock? Now, some of these companies, there's going to be conference calls, and we'll get to know more about them. They're not moving much yet, so nothing to talk about there. Microsoft closed at $211. Oh, we're crashing here to a whopping $5.5 whole. That's it. So it was up $3 today. We've given those $3 back, and then there's a crash of $2. It's a bit of a joke. Now, we do have a lower high if I zoom in here, but we still have higher lows. Now, it did get below the 20-day EMA 4 days ago. So if today's Wednesday, that would have been Friday of last week. That would be the first sign there could be some trouble. Then you get a rebound. And now, if it opens, right there where my pointer is, that's where we would open come tomorrow morning if it stays there. Below the red, again, would be a sign of trouble. Below the orange is the big one. Now, how about Netgear? Just bought one of their products this week. Here is NTGR. They exploded pre-earnings. They closed at $29.27 today. After hours, $31.50 is the bid. They're up about 10% after hours, so they're still doing quite well. And then here's Tesla. $15.92 is where we closed. Now we're trading at $16.90. So we're up, just for context, right around where my cursor is at $16.95. So apparently fundamentals don't really matter. I say that jokingly. This is hilarious. I am not trading this stock. It's bullish. You didn't need to tell you that. We're above all moving averages. It's gapping up right now. Post-market, it's about 4:39 p.m. Eastern as I'm doing this video. Who knows where it ends up tomorrow? We could have a big bearish engulfing pattern. We could gap lower, or we could be staring at, who knows, $2,000 by the time the market opens. So we'll see how traders react to that report. My guess is shorts are getting caught. They were thinking, okay, this has got to be the quarter where they don't perform, and that's the danger of being naked short. They are taking it in the shorts, if you will, getting their butts kicked. Take IRBT. Now, this was earnings earlier today. This is iRobot, and it's right on its 50-day moving average. This is one of the bigger percent losers on the day. If I was trading iRobot, we would have gotten above both the 20 and 50 back here on 4.8. It's been a really nice run. The 20-day was closed below back on 7.13, and now we're sitting on the 50. So if I was still bullish on this stock, if I get below the 50-day, which is an institutional moving average, I just can't be bullish on the daily charts anymore. So this one's going to be wait and see to see how tomorrow plays out. Today was a pickup in volume. Over 2 million shares, we're 2.3, and it looks like the average is probably under a million. That's a big deal. And you closed the lows of the day. Now, interestingly enough, it stopped right on the 50-day. So I could say as a trader, I'll hang in there one more day, we get below, and then it's, Katie bar the door, because there's an unfilled gap at 63, and then we come all the way back down into the 40s. Now, if this was a bigger position and money I could not afford to lose, I would have had a protective put applied already. In fact, the moment we broke the 20-day, which would have been, 3, 6, 7 days before the report, a week and a half ago, I would have added the protective put back here already on the 13th, or at least upon the open on the 14th. So now if that protective put gets held, if we end up regaining the 20-day, I could sell to close that protective put, and I'm going to assume I don't need it because the bulls would have the edge on the daily chart. But for now, it's going to start to pay off if this thing starts breaking down. Now, Coke had earnings earlier in the week. It did pop up. Today it was up another 2.7%. We need to clear that 6.8 high. That close was 49.85. So we get to 50 bucks. That's a breakout. Target considerably higher, 15 to 20% higher on Coke. Texas Instruments, it was down today on its earnings report, 2.18%. But look what it did. It hit the 20-day, and then it closed off the lows. So you would look at this and say that's huge volume, and that would be correct. But there was also buying coming in, pushing it off the lows. Today is not an awful, ugly-looking bearish candle at all. There was a gap down on earnings, and we end up closing impaired probably, almost half the losses on the day. So until it gets below the red line, even after today's move, the bulls get the edge on TXN. And we'll end with Netflix here. Netflix, as of yesterday, closed below the 20-day EMA. Today it was down a whopping, 28 cents. So we're still below the 20-day. If I was short-term trading Netflix, the bulls lost their edge on the very short-term basis, which is 20 trading days, 1 month worth of calendar time yesterday. Today, a little bit lower, no change. If we get below the orange line, then any thought the bulls had of being bullish on a daily chart via a technical basis is gone. So right now it's caution on Netflix. Watch that 50 days. If we get below there, bad news for the bulls. Okay, that is it. I'm going to wish you guys a great week. Unless tomorrow turns out to be a crazy day in the markets, I will be back with you on Sunday, and we'll do a weekend review and what to watch for this week. And then we'll cover the metals. We didn't talk about silver and gold, which I guess I could now. Silver's just gone bonkers. Today was up 9%. This little sucker is starting to break out. Let's just do that. Why not? So here's a 1-year chart. We cleared these highs we cleared the high from September right here on the 20th. And that's when it was around 1853. Now we're staring at 21. If I go back and look at a 3-year weekly, you can see we're breaking out. If I go back to a max weekly, silver is finally broken out. If we close higher this week on a weekly basis, this is a legitimate breakout technically for silver. If we end up giving back these gains on silver, then it's not. It will be a reversal candle. On a daily chart, if I switch this to a max daily, and it's not going to let me apparently. Come on, thinker. Oh, it's 5-year daily. There it is, max daily. And it still won't. That's fine. Let's go back to that max weekly. So I'll cover this in the weekend video. I'm really curious about Friday's close. And then if we look at gold, gold is up there challenging the all-time highs on GLD. It's not there yet. You can see this little bull flag pattern we had drawn in on a weekly basis. We broke out of there. Here was the big sell-off with the market pullback, and now we're just pushing higher. So the metals are technically bullish right now. Maybe it's with all the money being printed. We shall see. Watch for, as we get into September and October, that's usually when the metals put their tops in and they start drifting lower. So just be careful on those. Again, a recap on the metals and the miners in the weekend video. So now, have a great rest of the week, and I'll see you in the next video. Take good care.